Okay, guys, we're going to go through a IWM double calendar, and this is how we begin building our portfolio because remember, we don't want to have just a single position on. And in the other videos, you saw that we put on an EEM position, a double calendar. Now we're going to go after the IWM. The IWM is highly liquid. The option prices are really excellent. You can see that if we take a look here at the May 68 strike, there's only 2 cents in between the bid and ask. So they're really tight bids and ask spreads, and they're highly liquid. Lots of open interest on these, and they're pretty easy to get filled. So we're going to take a look at what we can do here on a new position. This is selecting a new position on the IWM, and we've got for the May options, we've got 32 days to expiration. We'll probably go with the May, and we'll go with the June quarterlies. They're not quite they don't have because the April options have not expired yet. They don't have the June, the regular options, so we'll go with the quarterlies. That's fine. I just want to double check on the implied volatilities. Let's say if we're doing the 67s, they're 29.95% on the May options, and on the 67s, they're 29.69. You don't get a lot of negative or positive skew. It's very, very small on a lot of the index options because they don't have earnings. You've got the IWM, which is the iShares Russell 2000 index. You've got 2,000 shares there. One or two earnings, or the earnings of quite a few of those stocks, is not going to have that much of an impact on the index options themselves. So normally that's not too much of an issue. When we get into selecting individual stocks on another video, that will be an issue, but not in this case. So what we want to do is we want to take a quick look at the graph of the IWM, and on the TOS platform it's pretty easy. I tend to use the profit charts. I have the charts that TOS provides, but I have it preset for the technical analysis, the kind of a quick review of the market direction that I showed you in the videos on using on the TOS platform. So normally when I take a look at an index or a stock, I'll use the profit charts. Now, what we have right here is major overhead resistance right around the 73 area. Like I said, I don't like to predict price, but support and resistance areas are important as well as channels. And I've looked at the channel here, and we're definitely in a downtrend channel. As you can see from about, going back to maybe August, we had this big sell-off here in August, and then we've just kind of been trading and trending down ever since then. So what I want to do is take a look at the major resistance and support areas. This is a major, right around the 73 area is a major resistance area. It was support here, and what happens to support? It turns into resistance after it breaks through, and it's hit it here, it hit it here, it kind of attempted it on these 2 points. It came back up again here, very close to it, but then sold off. And on the downside, it looks like around 64 is the support area for the IWM. So we want to remember those support and resistance points when we go in and set up our double calendar, because we'd like to have our break evens at those points. That gives us the widest profitable range. And also, statistically, the probability is in our favor that the IWM, unless we get into a real bull market here, will exceed those. And then all we have to do is adjust our trades accordingly. Because we always trade with confidence. We set up our trades initially. We give ourselves enough time to be able to make adjustments if necessary, and we anticipate the future and then manage trades once they get out of hand. And that's all there really is to it. I mean, we can trade with confidence because we know what to do ahead of time. So I've also set up this little blue channel here, which, on the upper end, remember, support becomes resistance, resistance becomes support. This support down here I put at the upper trend channel line. It looks like it hit it here and it bounced off, and it came back down through and then hit this lower support blue line. If we get into an up channel line, I'm trying to set the channels ahead of time. I'm trying to anticipate a little bit, not a lot, but a little bit. And it looks like we've hit the support on this new uptrend channel here, and then again today. So, it looks like it's holding. That may be, the beginning of a new uptrend in the IWM. We'll have to see how this goes over the next 30 days while we're in this trade. So the indexes today have been hovering above and below positive territory. The Dow Jones was up at one point about 20-30 points. It's been down 20-30 points. Right now it's about negative 7 points. So that doesn't make too much of a difference for how we put on this trade, but it's just kind of interesting to note. Okay, now we're going to go into the trade tab. I've got IWM already set up in our stock and option quote screen. And what we want to do is go into, let's pick the 70s first. And we want to buy, and we want to enter this as a single trade. So we're going to be buying the double calendar, and we're going, so we have to click on double diagonal and then go over to double calendar. It's already set us up with the 70 calls. We want to select our puts. Let's go down to the 67 puts. It just gives us a few points on either side of the current market price. Then we're going to right click in this green area and analyze a duplicate trade. Okay, let's just take a look. I have a small position in the IWM, so I just took that off, and I want to only analyze. It's already hiding the position, so that's good. What I want to do is analyze this position now, and it looks like we're dead center on this, and it's got, let's take a look at we'll set our slices to the break even. We want to make sure that we are on the May expiration, because those are our short, that's our short position, is May. We want to take this red lock off it so we get current prices. Our break even is around 64.71 on the downside, 73 on the upside. If we take a look at our profit chart again, 73 was resistance, 64 was support. So unless we continue up this blue uptrend channel, we'll probably break through this resistance, but we can always adjust our trade later because we do not predict price. Always remember that we don't predict price. So this looks like a good position to put on. Let's just take a look at our picture again. Remember, the green line is what our profit picture looks like at expiration if the stock stays, in this case ETF, stays in between our break-even points. If it falls below that, we hit our maximum loss, which in this case is only $242 on a single contract. If we do two contracts, our margin requirement is $484. Our maximum profit is going to be anywhere between, let's look at this top peak here, which is $366. If we land right at 70, which is also the our short call for May, is right at the 70 peak. So what we want to do is just kind of stretch this out a little bit, and to stretch it out, as you remember, all you have to do is put your cursor down here where the numbers are and drag it to the right, and you can stretch that out a little bit. Just get a better picture of where we are. And we're right dead center, so that looks really good. We don't have too much of a sag in our tent here. We don't want it sagging all the way down here because it doesn't give us enough really a nice profit area. And I like to see this middle section nice and wide and nice and tall for a double calendar. So that's it's not too bad. On 2 contracts, we've got a potential $340, $50, $60 in profit. We've got a $478 margin requirement, which is nothing, which is very, very good. Our profit target's going to be about 20% of our maximum profit gain, which is going to be about 20% times 370. It's going to be up around $120 or so, right around this area, right around in here. Remember, our white line is our current profit and loss, and when you set up these kinds of positions, you always start out at a loss, because the market's not going to give you a profit from day one. We do have theta is 4.53. That's $4.53 for every single day that we remain in the trade, and that's very important. When we get into adjustments, and we also get into portfolio management by the Greeks, we'll go into more detail on that. But as long as you're setting up a double calendar according to the requirements that we've determined here, you're always going to be positive theta. If you're doing double calendars, you're going to be positive theta. You're also going to have a negative profit and loss on the first day, but don't worry, because that will improve over time, because theta declines, theta remains positive. The option prices the options that you're selling, because we're selling the Mays here, they are the near-term options with about 30 days left. As the expiration date draws near, those will continue to decline in value. So this looks very good. Right now it's $2.39, so we're going to go ahead and confirm and send this. Then we can get this off to the market. We should be able to get, I'm hoping we get our mid price on this, because we really do have a they're very, very tight bid and ask on these. So let's get this off, and our total cost here is $478. That is our margin requirement. $12 in commissions for a total cost of $490. So we're going to send that off, and they are working on that now. And that's pretty much all there is to it. All we have to do is kind of wait and see if we get our position filled. I'm hoping that we will. We like to always right click on these, take a look at the cancel replace. We're a little bit below the market right now. If we want to, if we want to get filled very, very quickly, we can always raise our price a little bit. Let's see what it does to our profitability. We can analyze this again and take a look at what would happen if we did want to raise it up a little bit. We don't want to be, you see where our zero line is here? We don't want our white line too far below that, because we start out at a really negative position if we do. So we want to try to stay, right as close as possible to that zero line where our current price is, as much as possible. We may have to give up a penny or two as we go along, but if we want to, and if we can go up to 244, let's just take a look what happens to our graph. We start to see a little separation here between our white line and our profit. So we don't want to start off too negative here, but a few dollars, a few pennies is not going to make too much of a difference in our overall position. So we can go up to 244 if we don't get filled here, and we should be okay. We got it in there for a couple of minutes, but it doesn't, this may not hit. So let's go up a few pennies. We'll go to 243 and see if we can get hit on that. Let's double check our graph. If we get a 243, that still looks pretty good. And we'll try that for a few minutes. And like I said, you know, you have to kind of work these once in a while. You go back in, look at cancel, replace order to see where the current market is. And let's see if they want to give it to us. You know, sometimes it's very difficult to get filled if the market's moving around too much. Today it's pretty calm. It's only, you know, the Dow Jones is only down about $5. And so let's see if we can get hit at 243. If not, we wait about we can wait about 5 minutes and then replace our order with another one. And this is how we start to build a portfolio trade. We don't put a lot of contracts on. Remember, when you're just starting out, you want to put on 1 or 2 contracts, maybe 3 contracts at the most. You want to give yourself an opportunity not to get hurt too bad. If you're just starting out, you have to learn how to manage these trades as you go. And the only way to do that without panicking is to do small contracts. Now, once you get to the point where you really know what you're doing, you can go ahead and put in, you know, 3, 4, 5, you know, 10 contracts at a time. But the easiest way to get started is to do these low contracts. That's why we don't show you other positions in which we have 10, 20, 30, 40, 50 contracts at a time on. So, you know, we're just waiting here for this position to get filled. We put it in at 1405, which was just about a minute or so ago. We haven't gotten filled yet, but we should be getting hit pretty soon here because the market is moving around our midpoint, our limit here, and we're above the mid. Now we're at the mid. It does move around a little bit. We can also take a quick look at the charts to see what's happening with the overall market. Like I said, when if you take a look at using the TOS platform, I like to set this up on the TOS charts because I've got the Qs minus the QIDs, which is a pair trade, and they tend to trend much better than the actual prices themselves. And it's almost like a tell. If you play poker, you know what a tell is. A tell is kind of like a determination of when the market is giving you a head fake and when it's not giving you a head fake and which direction it's actually going into. If we take a look at the daily charts on this pair trade, you can see that we've been trending down since October, the middle of October last year, the beginning of November, and we've been trading down, but we've hit a potential bottom in the market here. These tend, because it's a pair trade, it tends to trend truer than the actual price charts themselves, and that's why I like to use this. Let's take a look and see what the IWM is doing right now. Just kind of hanging around. Let's take a look at our trade. We should be good. I guess if we really want to hit this, if we really want to get this thing filled, we may have to go up to 245 here. Let's see what they do for us. Let's go up to 244. Yeah, it's been about 5 minutes. If we go up to 244, we should get hit very quickly. Yep, we got filled. So, I mean, you just have to kind of, take a look at your positions once in a while and just kind of manage those. Now we're going to delete those. We're going to take a look at our real positions. And there we are. Now we are in the trade. We're in a good spot, I think. We're not too bad. We want to keep an eye on this. We're starting out with a small loss, as all double calendars do, because you're not going to make money on the very first day. This is a trade that improves over time. We have good theta, and our deltas are pretty neutral. Our vega's okay, but we're in a good shape. We're in a good position here. Let's set our slices again to break even, and you can see we're still down around 64.5, 65, and 73 on the upside, which is exactly where we set our resistance and support points. Because we've been in a trading range here. So all we have to do now is, now that we're in the trade, we're going to continue to monitor it, on a pretty much a daily basis. We want to take a look at it every single day, but we want to also take a look at it every day, just in case we need to do, in case the Russell really starts to move around here, we want to take a look at our individual trades and adjust if necessary. And so now we're in the trade. All we have to do is manage it. We're in a really good position here. I like the shape of this tent. It doesn't sag too far. Got nice wide break evens. And as days by day goes by, this white line is going to continue to move up and up and up and up, just like it does. And I will show you how it does move up over time to create a very profitable position for us. This is a trade that I am currently in that I haven't closed out yet for the April and May expirations, which is just a few days away. You can see when this trade first came on, our white line, which was our current profit and loss graph, was down, way down below the zero line here, and now it's moved up so that we have close to $158, $160 in profit, and we're still in very, very good shape here. Our tent is not sagging; it's up quite high, and the only reason I'm staying in this position was I got in kind of late. I actually had to adjust this position a little bit, but I think we're still in very, very good shape here. And this will continue to be profitable. We've only got 4 days left on it, so I'm kind of hoping that we can extract maybe 100, because we've got $418 maximum profit at expiration. We've got 150 so dollars currently. I think we can bring that up to around $300 in profit over the next couple of days if the market doesn't move too much. But even if it does move either way, we can still generate quite a bit of profit here. So that's what eventually our position in the IWM is going to look like. That white line is going to continue to increase as long as we don't have to adjust it. And then we're in good shape. Now, if we do have to adjust it, what happens is normally when you're adjusting a position, you're going to lose a little bit of profit, but you're going to remain profitable. So in other words, your maximum profit may decrease if we do have to adjust the position, but you will remain profitable in the position because of the adjustments that we're making. That's a very important point. You want to adjust your positions to remain profitable. However, your maximum profit may decline over time. But we start out with very small positions, 1 or 2 contracts at the most, and that's how we want to manage the position. Now, over time, this will increase in value, and that's our exact goal. Now we are building a portfolio. We put a position on. This is for the May expiration. We're writing the May options. We're buying the June quarterlies. You can see our positions are here. And that's how we're building a portfolio. Now we're going to go to, we're going to take a look at the EEM position. I keep typing 3 E's in there. We're going to be building a position very shortly in the diamonds. So we're going to have several positions in several different indexes because they really do act differently at different times. The diamonds are the Dow Jones Industrial 30 stocks ETF. The EEM is the Emerging Market ETF. Why, I love those 3 M's, I guess, 3 E's. And also we have the Russell 2000, which is a much broader index of 2,000 stocks. So that is how we set up that, and as always, trade with confidence.